Okay, so continuing on, bought supplies on account. We said supplies is an asset, accounts payable is a liability, and assets are increased. Let me get on the screen here. With a debit, liabilities are increased with a with a credit, because they're on the right side of the accounting equation. Everything on the right side of the equation, the increased side is the credit side. Of course, everything to the left side is the debit side. Assets. Supplies are debited for 220. Accounts payable, Kenyon Office Supplies is credited for 220. Paid cash on account. Again, you have to think about, what does account mean? We'll just pause right there. What does paid cash on account mean? Who owes who what? Well, paid cash on account to Canyon Office Supplies. Remember, we just bought office supplies from them a few transactions ago. So, question one, which accounts are affected? Accounts payable and cash. We have the T accounts up for those. Cash is an asset. That's how it's classified. Accounts payable is a liability. That's how it's classified. Assets are decreased with a credit. Liabilities are decreased with a debit. So both assets and liabilities are being decreased. We owe them less money, but we have to decrease an asset, cash, to make that happen. Cash is credited, decrease an asset. Accounts payable is debited, decrease a liability. State the four questions used to analyze the transaction. And we have these around the room. So again, which accounts are affected? How is each account classified? How is each classification changed? How is each amount entered in the accounts? Okay, just keep that in front of you all the time for practice. What two accounts are affected when a business buys supplies on account? Two accounts. Again, we're in that which accounts are affected category of our four analyzing transactions questions. Well, supplies and accounts payable are affected. All right, so there you go. Now we will be working on week blah, 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 week 6. I'm going to slide this over. Week 6 in Applia. There we go. And I would do the working papers. Actually, let's go down here. I would do the working papers 2.2 first. This animated activity, I'm just going to kind of show those videos, and we're going to pause them just for practice as we go along. That is not a graded assignment. And then the application problem 2.2. And maybe before the end of the period, we might be diving into lesson 2.3 for chapter 2. All right. So there you go. And we'll work on those. And let me just get you started here on our working papers for practice, which I hope I haven't done yet. Okay. And we can go up here and we can pin our entries up there. Cash. Those are our different accounts. So down here, where's my instructions at? I just wiped those out, didn't I? Hello. How about we unpin? Oh my goodness. Terrible. Awful. All right. Where's my transactions at? Transaction 1, receive cash from owner as an investment. Well, okay. On March 1st. So I've got cash for $4,000. And that's on the debit side or the left side, and increasing an asset. And I've got John Jensen drawing. That's a lie. John Jensen capital. Drawing is when we pull money out. Capital is when we invest money in. So he's putting $4,000 in as an investment. Okay. Next, we're going to go with paid cash for supplies. Well, we've got supplies. We'll enter that first, $95. We're going to say cash. We're going to credit it for 95. So in this case, we're not affecting anything on the left side. And we'll continue with the practice with that. I just kind of got you started there. Let's just keep on going here. Bought supplies on account from Supply Depot. Okay. We're going to put in supplies. We bought $120 worth. We bought it on accounts. That's going to be accounts payable supplies depot. We're going to increase the liability with a credit. Increase the asset with a debit, left side. Increase the liability with a credit, right side. Paid cash for insurance. Prepaid insurance, $250. We paid cash, so we're going to credit that asset for $250. Increase one asset, decrease another asset. Prepaid insurance is an asset. On the 9th, paid cash on account to Supply Depot. What are we debiting? We're debiting accounts payable Supply Depot. We decrease the liability because it's on the right side of the accounting equation with a debit of $80. We paid cash, so we're paying cash of $80. We're crediting cash, we're decreasing an asset with a credit, we're decreasing a liability with a debit. So both the liability and the asset decreased. Okay, there you go. That's to get you started, and you can continue on from there with, I'm not going to save that. You can continue on there with the application problem 2.2. Again, we'll go over that animated activity 2.2 together in class. All right. Thank you and happy balancing.